Good morning, good morning, good morning. Welcome to today's Morning Blast. It is Thursday, the 30th of April, all day. I think what are we now, day 62 in the Thunderdome over in the Middle East, something like that. You join myself, Michael, and of course, Clive Lambert's futures, levels, etc., for a podcast on markets with no filter, no faff, apart from when we start faffing around and going off on various tangents. Nothing discussed on the podcast is trading or investment advice. Nothing we say is an endorsement. Yeah, they're labeled as explicit on podcast players because we have the mouths of sailors. But cracking on, but before I introduce Michael Brown, so what we're here to discuss today is the Fed has had the messiest vote since 1992. The Bank of England is about to have its most awkward decision since Truss. Big Tech spent more last night whilst telling us, whilst also OpenAI is spending less. Machines are expensive, chairs are changing, and Apple's up later. Michael Brown, how are you?
Well, a very good morning to you, Ryan. Good morning, everyone. Not too bad, thank you, mates. Yesterday's central bank and earnings bonanza are out the way. Looking forward to the Bank of England and the ECB a little bit later on today. Although I would say you mentioned there that we speak like sailors. I think there's probably sailors out there who are slightly more eloquent than we are, to be completely honest.
See what I did there?
Yeah, worrying me. But yes, lots going on. Just about managing to survive. I'm already looking forward to a beer tomorrow when all this is over.
Well, remember, it's only basically, as I read this morning, it's only basically in Europe, it's only basically us and Denmark that are working tomorrow. And based on how the week's been, I'm almost tempted to say, fuck it, I'm going to be European tomorrow and have the day off.
Well, we do have Monday off to make up for that. But
Well, yeah, I'm accustomed to these 4-day weekends that we've had recently.
this is true.
Speaking of someone that loves the day off, Clive Lambert, and from
who's not here next week?
He's not here next week. He's doing a Judith Chalmers. There we go. Right, let's get the levels out of the way in the markets. What market levels to what, etc. From Clive Lambert, our dear friend over at Futures Text. In equities, obviously starting there as usual. S&P put on a second red candle in a row on the daily chart yesterday for the first time since late March, which kind of just shows you how strong this market is. A rally overnight has found the sellers as well, so some signs of life from the bears, but only some.
Month-end flows, isn't it?
Month-end flows, mate. Rebalancing. Not the floors, but yeah, 5 notes. 2 down days in a month is not exactly something for the bulls to get too worried about. Nasdaq futures made an all-time high overnight this morning, 27,623, followed by selling again. Nothing trend changing. Over on this side of the pond, European equities, there's been a shift on this side with the DAX saw red yesterday and overnight and is currently below the 23,880 level that we've been watching of late. FTSE, obviously the 100, is also through the Fibonacci level of 10,328, gunning for 10,080 next. Eurostoxx 50, that's filled the gap from the 7th to the 8th of April at 5,694 overnight and found some buyers. So something for the bulls on that front. A very small bit of good news for bulls in European equity space. In fixed income FX, bond futures are still selling off. Bond futures are now eyeing the recent year-to-date low at 124.25. Meanwhile, in euro dollar currency, not the stirs, is back at its 200-day simple moving average after seeing weakness yesterday. In metal space, gold, the yellow metal, sold off through 4,627 to 4,522, where we found some buyers. Silver, the silver metal, is also weaker and didn't hold the trend.
Doesn't quite work, does it?
Yeah, it doesn't work at all. Sold the trend line that Clive's been watching of late. So more bear news there, sorry. London zinc testing Fibonacci support at 3,314 and aluminium is weaker, eyeing support at 3,435. In energy space, Brent crude rallied strongly yesterday. We'll get onto that in a minute. Got up to 113.81, then 114.70 overnight. 108.19 is now the Marubozu support. Reminder, if you get a massive fuck off candle, Marubozu line is basically the middle of that body of the candle.
That's not quite how it's described in the book as a, quote, massive fuck off candle, but it gives you a good idea.
Although, do you know what? I'm now thinking of a business idea. Sweary technical analysis.
Do you know what? It's probably been more exciting than most technical analysis.
I love Clive's work. I'm not, Anyway, quickly, moving on. Where was I? I'll say the WTI again. I can't remember if I mentioned that. WTI got up to 110.93 overnight, so might be starting to think about a retest of 117.63 and 119.48. EU carbon markets and TTF gas. Start with TTF, was obviously European benchmark gas. TTF has rolled to June in the futures contracts. This has failed at gap resistance at 48.95 overnight after posting a large green candle yesterday. 45.50 is Marabouzi supporting that one. Remember, middle of a big fuck off candle. EU carbon markets, they sold off through the €74.10 yesterday, triggering weakness to 72.85 and 72.43 in early trade today as Clive went to print. And finally, from Clive, ag space, obviously US agricultural markets. Corn was green again, gunning for 481 next, then back to the 487.4, which was the high slash spike from March. And finally, wheat, which is, as you should all know by now, is the ginger stepchild of the agricultural complex. Saw some upside rejection, no surprise there yesterday, and posted a shooting star reversal candle, which might end its recent run higher. Thank you very much, Clive Lambert.
Very good. Thank you, Clive. Thank you, Ryan. Where the fuck do we want to start this morning?
Well, let's just get the Middle East out of the way a little bit.
Yeah, good idea. Let's do that. Again, well, there were a few more headlines yesterday, but none of them especially concrete, although they did lean bearish, risk, bullish energy in terms of the general vibe of the news flow. We had Axios and N12 News reporting comments from President Trump, noting that he will not be lifting the blockade on Iranian ports without a nuclear deal being agreed. And then we had further reporting via Axios overnight that US Central Command, which is the military guys who basically run all operations in the Middle East, they are going to be briefing President Trump at some stage today on plans for potential military action in Iran. These plans include a range of options, including potentially trying to take control of the Strait of Hormuz, or a short and powerful strike potentially targeting infrastructure aimed at breaking the nuclear deadlock. Of course, the reports stress that no decision has actually been made on any of those options, or indeed whether to even take military action at this point. The ceasefire does indeed continue to hold. But we did hear from President Trump himself early doors yesterday. He was saying on Truth Social that, and I quote, "Iran can't get their act together. They don't know how to sign a non-nuclear deal. They better get smart soon." And that post was accompanied by a meme with President Trump holding a machine gun captioned, "No more Mr. Nice Guy." Again, this is sort of very bellicose rhetoric, whether it leads to
great
any
word.
Thank you very much. Whether that leads to any sort of kinetic action or a re-escalation in the conflict in the Middle East, only time will tell. But I think that, coupled with this continued, impasse in the Strait of Hormuz and the negotiations being at a bit of a stalemate, is clearly what's been driving crude benchmarks higher and what's been driving the bulk of this sell-off that we've seen in government bonds across developed markets over the last 24, 36 hours or so.
Yeah, no, exactly that. And I think it was yesterday, I don't know, it's all blowing into one. I mentioned yesterday where I kind of said, look, at what point does no news equal bad news? I kind of think, looking back, maybe we've kind of been in that for the last week anyway, because just nothing's happening. And let's make it, let's be abundantly clear, this kind of, flip the view on its head. Kinetic action right now, going in and finishing off what's left of the Iranian kind of industrial might, air quotes there that you can't see, obviously, which I keep forgetting. At what point does Trump say, actually, fuck it, we're going to go in and really wipe them out? What point does that turn bullish for the Strait of Hormuz? Because at the moment, there is a ceasefire, but nothing's happening, nothing's transiting the strait anyway. So at what point does, you see what I mean? I'm trying to flip it on its head somewhat and say, well, look, do you know what?
Well, if
Trump going in there and saying, right, do you know what? We're just going to finish off anyone that's left. That could be, good news for the Strait of Hormuz.
Well, it comes back to the whole escalate to de-escalate idea once again, doesn't it? Really, are we? What is a better scenario? And I don't know the answer to this. I'm very interested to hear your view and views from the floor. What is a better scenario for crude right now? Is it another 2 weeks of basically what we've got at the moment, which is a stalemate and basically one VLCC a day making a transit, if that? Or is it a week of very, very intense strikes on Iran, followed by a week where Hormuz reopens?
Yeah. No, exactly that.
Again, I think that's kind of what you're saying.
Yeah.
I mean, I would say probably the second scenario is actually better. You're probably going to see 150 then 100 in terms of price, because the market's going to panic if and when kinetic action were to resume.
This is it. It's one of those that it's all right being like, you'll be right, but fuck me, you'll be wrong for short term.
Yeah, good luck trying to trade that.
It is going to feel very, very awkward when you're clicking the sell button as the Missiles are flying over to it. But it might be the trade to
But
make. Buy the rumor, sell.
yeah,
Well, here you go. Buy the rumor, sell the fact. It's perfect.
well, exactly that. So, yeah, we'll obviously continue to monitor that closely. The key focus on the geopolitical front will be any reporting that we get from that CENTCOM briefing. Obviously, it's behind closed doors, but there will be leaks from it. You're almost sure. So we will see what happens on that front.
Perfect.
But should we move on?
Yeah, quickly. I'm glad that we've spent as little time as possible on the Middle East. Right. FOMC?
Yes. Indeed, yeah. The FOMC obviously holding the target range for the Fed funds rate steady between 3.5% and 3.75%, bang in line with expectations. The vote was a bit messy, though, if we're being completely honest.
Messier since 1992, mate.
Thank you, Claude. In terms of the rate decision itself, the decision to stand pat on rates was carried by 11-1, with just Governor Miran dissenting in favour of a 25 basis point rate cut at what will be his final meeting on the board. The other dissent came not in terms of the rate decision, but in terms of the language in the policy statement. So 3 of the regional presidents, Hamak, Kashkari and Logan, they did not want to include the line that alluded to additional adjustments in the Fed funds rate because they view that as an easing bias and they did not see it as appropriate to include such an easing bias at the current time. In my view, this feels a little bit like some grandstanding going on here from the regional presidents. It feels more like they are trying to send a message to incoming chair Kevin Warsh and basically saying, you're not going to come in and roll us over. We have our own minds, we have our own views, than it is any sort of policy signal. So I think, all of this, there's been a lot of framing that has been, in my view, wrong around the Fed decision where people have been saying, they voted 8-4 to hold rates. No, they didn't. They voted 11-1 to hold rates, and 3 of them were quibbling over the language that was used in the statement. And actually, there is a very, very good chance, and Chair Powell said this himself at the post-meeting press conference, that the statement looks totally different next time out because Kevin Warsh is going to be at the helm. He may want to structure things differently. He may want to say different things in the statement. Hell, he might even not want to issue a statement.
Exactly.
We do not know what he wants to do. So I would not be reading too much into these dissents whatsoever.
And this is the thing, right? Again, people, especially, a lot of people have a lot of recency bias and they just presume that this is how every statement has always been. There was a time before dot plots and, if hopefully Kevin Walsh gets his way and we'll have a time after dot plots.
Yeah,
fucking hate dot plots. But anyway, that's enough about dot plots.
Well, even Jay Powell at the presser last night said something along the lines of, I've never been a fan of them.
Yeah.
It's like,
come on.
You're the main man.
You're the one person that could actually turn it around. But anyway.
Exactly that. But besides that, we didn't really learn too much from the FOMC last night, in all honesty, as expected, because, Jerome Powell wants to basically hand the baton over and give Kevin Warsh a bit of a clean slate. The one thing that obviously was of most interest going into the presser was what Powell is going to do next. And we did indeed get an answer to that question in that Jay Powell will be remaining as a Fed governor for the time being. In his words, he will stay on the board for, quote, a period of time to be determined, and that he said he will keep a low profile during that period. He was asked what a low profile looks like, and he just ducked behind the podium. So, which I thought was quite amusing. I would assume he is not going to make many, if any, public speeches during his period as a governor. This is more a case of Powell wanting the DOJ investigation to be over, as he called it, with finality. Obviously, it's been passed to the Office of the Inspector General. There is some talk that it could come back, to the fore at some point in the future. So Powell is basically hanging around until there is no chance of that happening, which is, kind of in keeping with what he said previously. And indeed, absolutely fair enough. But in terms of policy guidance, there wasn't really much. The Fed is still in this kind of wait and see mode. My view is that, it's almost, it feels, I put this out on Twitter this morning, it feels like a bit of a rerun of the last 2 years where, 24 and 25, we started the year with a relatively hawkish Fed, and then they pivoted slowly but surely through spring and summer, and then cut rates through the autumn and winter. It kind of feels a little bit like we're going to do that for a third time running, in my book. Of course, we will see what happens when Kevin Warsh takes over. A lot depends on the situation in the Middle East, naturally. But in terms of last night, we really didn't glean anything by way of pertinent new information, I don't think.
Quite. And speaking of last night, earnings.
Oh God, yeah. I mean, the first I
Oh,
said
come on, that was a fucking slick segue. Come
it
on, that
was very good for you.
yeah.
That was
I mean,
remarkable.
for me,
Gold star.
normally I'm like blindfold on, and we'll kind of stagger into the next topic.
Yeah, earnings. I mean, we won't go through all of the figures because we will literally be here forever. I think the most interesting theme to pick out of it all, once all the dust settled and we got through the post earnings calls and all the rest of it, was the divergence that we saw across the hyperscalers. So, of course, we had earnings on the bell last night from Amazon, Alphabet, Meta, and from Microsoft. Pretty much all of those delivered top and bottom line beats, as you would expect. The
Yeah.
Meta beat was skewed higher by a little bit of an accounting quirk, basically, which meant their EPS was about $3 a share higher than it otherwise would have been. But actually, Meta was the only one of those stocks to experience quite a chunky sell-off and hold that sell-off through after-hours trade yesterday. And that came after Meta again raised their capex guidance. Previously, they saw financial year capex between 115 and 135 billion. They now see that between 125 and 145 billion dollars. Now, they weren't alone in raising their capex guidance, it must be said. Microsoft did the same, Alphabet did the same. The key thing for Meta, and I think this is why the market's taking a bit of a dim view of it, is the other three are actually clearly showing already that they are able to monetize this capital
Yeah,
expenditure
exactly
because their
that.
revenues are growing at a very, very strong pace.
Yeah.
Meta, not only are they not really able to monetize it at this moment in time, but also the vast majority, if not all of their capital expenditure is being internalized to build,
Yes.
this metaverse. It's not actually being used to be sold as a product. And I think that those two reasons combined are why the market looked at Meta through a very different lens than it looked at the other three who reported last night, who actually enjoyed a relatively solid after-hours bounce. Google or Alphabet outperformed, and it did drag the Nasdaq future, as Clive alluded to contract highs as well.
Yeah, absolutely that. And again, I said it yesterday. You could have told me the earnings results, whilst we were on the show yesterday morning, and I'd have still done my arse if I'd have tried trading earnings. Looked at the price action after it all died down, I'd have done my absolute conkers.
Oh,
Um,
I'm very much with you on that one. I mean, I think,
uh,
as we said, you look at the earnings. Well, first of all, they all fucking hit within about 10 seconds of each other. So
yeah,
thanks for
great,
that one,
thanks.
guys. But, you glance at those very briefly and you go, well, they've beaten on every line. But the
Yeah,
market reaction does not speak to the fact that they beat on every line. There are sort of
yeah.
more
And then I
moving
checked
parts than
my
that.
then I checked my open P&L on my Microsoft. I'm like, hang on a second, am I looking at the wrong fucking stock? Anyway, enough about me. Come on, Mike, come on, Bill Gates, whoever's in charge now, whip that
Just,
bag.
oh God. Actually, speaking, we haven't heard about Pony AI recently. I might have to do some digging into what they're up to. They seem to have gone very, very quiet. And we're still
Did you
waiting for a
not?
royalty check.
So did you not get the invite to the AGM?
Mate, there is no way that they're inviting you to an AGM. No company would even, you wouldn't even get invited to a PIQ AGM, for goodness sake.
Oh, slanderous. Well, if you can send me one of your plus ones, I'll happily come to the PIQ one. Right. Anyway,
I just want to, just while we're
go
on
on.
earnings, very quickly, we do of course get figures from Apple after the close tonight. EPS expected
Oh yeah.
196 on revenues of about $110 billion. Again, of course, Apple being the second biggest stock by weight in both the S&P and the Nasdaq. Those figures are due 9:30 London time this evening, 4:30 on the East Coast. So do just bear that one in mind.
Yeah. Very true. Very true. BoE ECB today.
Oh, fuck me. It's going to be a shit show,
Oh,
isn't it?
don't pretend you don't get all frothy knickers when the BoE are on.
Oh, God. Well, let's do the BOE first then, in that
Go on.
case.
Yeah, I thought you would.
So it goes without saying, bank rate will be held steady at 3.75%. As always, though, or has been the case in recent meetings, focus in terms of the BOE will be on the accompanying policy statement and also on the vote split. In terms of that vote, the Bloomberg consensus points to an 8-1 vote in favour of holding bank rates steady, with chief economist Hugh Pill seen as the most likely dissenter in favour of a 25 basis point rate hike. There is also, of course, based on recent public comment, some chance of external member Megan Green and or external member Catherine Mann joining him in that hawkish dissent. As for the statement itself, I think we're likely to see prior guidance repeated, basically the bank saying they're ready to act as necessary to get inflation back to 2% over the medium term. I don't think there'll be any more explicit in terms of a tightening bias or any policy bias than that fairly boilerplate language. The minutes, though, again, are going to be very, very important. We now get all of those individual paragraphs from all of the 9 MPC members. Given that basically calling Bank of England policy now is akin to just counting votes on the MPC, all of those paragraphs are going to be worth a read to gauge who is already in favour of a hike, who is close to being in favour of a hike, and what are they looking for to push them over the edge and actually pull the trigger and vote for that policy action. Because right now, obviously, we assume Hugh Pill is relatively close, Megan Green probably relatively close. That's only 2 of the 7. Goes without saying you need, 2 of the 9. Goes without saying you need 5 of the 9 in order to get a majority vote for a policy action. How close are we to that majority vote potentially existing? That is going to be something that the market pays very, very close attention to. We do get new forecasts from the bank. I personally wouldn't be paying much attention to those whatsoever because they're going to have an incredibly short shelf life given everything that's going on at the moment. But we do need to pay attention to the post-meeting press conference. In recent weeks, Governor Bailey has said 3 times that the market is getting ahead of itself in pricing rate hikes. The curve has 75 basis points of hikes priced by the end of the year. Does the governor try and push back on that once more? He's also said in previous remarks, he said to the BBC last week that the bank are not going to rush into judgments regarding what's going on in the Middle East. Does he repeat that line? You would very much expect him to do so. So a lot of moving parts around the BoE. The first focus for markets will be the vote. How many are already voting for a hike? The second focus for markets will be the minutes. How many are close to voting for a rate hike? And then the third focus shortly after will be on the presser and actually where does Governor Bailey want to try and steer not only his colleagues on the MPC, but also financial market expectations.
Yeah, I think just one way to frame it as well is just for anyone that's kind of not, glued to the Fred needle street is if it wasn't for the war in the Middle East, pretty much the MPC would be cutting right now.
They would have cut last month,
Yeah, they are desperate to cut. They're looking at the worsening economic situation in the UK. They're looking at potentially worsening political landscape. We're hearing rumours of Reeves dropping out and stuff like that. They are desperate to cut, but the only thing holding them back is the Middle East conflict. So it's just always good to remind yourself that is kind of the neutral positioning is cut, but it's only because of what's going on with the inflationary pressures in the Middle East and energy costs that are kind of holding that back. Although, as I've said previously, why they are still holding back, I don't know because it's not like if you did anything with rates, it's going to impact the price of oil, but that's just me.
No, anyway, I agree with you on that one, but there we are.
Stay ahead. ECB.
ECB. God. So the ECB, and of course, just in terms of timings, Bank of England decision is at midday, press conference at 12:30 lunchtime here in London. We get the ECB decision at 1:15 this afternoon, London time, and that will be followed by the ECB press conference at 1:45 London time. The ECB also set to hold the deposit rate steady at 2%, probably reiterating a data-dependent and meeting-by-meeting approach in the policy statement. Markets will be keen to see whether there is any explicit tightening bias added to that statement, given that we are now fully discounting a 25 basis point hike at the June meeting. Again, at the press conference, be looking to hear what Lagarde has to say about the potential for policy tightening in the short term. She said a couple of weeks ago that the ECB needs more data before drawing conclusions and that they are not yet in their adverse scenario. Does she sound any more hawkish than that? Is basically the only thing you need to look for at the press conference. Although it's not, because the second thing you need to look for is whether my German lookalike is there in the audience. The other thing to keep an eye on during
Do you reckon his mates send him pictures of you?
Joe, I'd love it if they did. Just be like a full circle moment.
Yeah, exactly.
There's this sell-side strategist in London who looks a bit like you, pal. Anyway, the other thing...
What do you mean he's only 28?
It's when we find out this fella's younger. Oh. Anyway, the other thing to keep an eye on, speaking of journalists, is the potential for sources stories from the ECB at some point this afternoon. Of course, last time out, we got some sources very shortly after the meeting that basically said April is not on the cards, but June could be. Do we get similar sources reports this time, or do they try and lay the foundations for a June move a little bit more? That's the key thing to watch there.
On sources, rule of thumb, the quicker that the sources' comments come out from the decision, the more disharmony there is within the ECB. And I say that because sometimes we've had them before Lagarde's got up and given a speech, which that's when everyone is falling out.
Yeah, we have had them between the decision and the presser.
Which
I
took a few of
remember
us
when that happened.
Yeah, it took a few of us by surprise because that's the moment you can kind of nip out to Burley's and grab a sandwich.
Yeah, exactly.
But anyway.
But yeah, besides that, we do have some data today.
Yeah.
We get the first read on Q1 GDP from the Eurozone and the US today. It's going to be very overshadowed by all of those policy decisions, but do bear in mind that the US figure, that is going to be skewed higher because obviously you've got all of the unwinding of the government shutdown from last year, which is going to be added on to the top of the GDP print this time around. The other thing we get today, or one of the other things we get today, is the latest Eurozone inflation numbers. They're due at 10 o'clock this morning. Headline CPI is seen rising to 3% in April, which will be its highest level since September of 2023. And we also get jobless claims and the Chicago PMI print out of the United States as well. But again, they are going to be very much overshadowed by what's going on Threadneedle Street and in Frankfurt.
Exactly that. And of course, looking ahead a little bit further, non-farm payrolls tomorrow, the most irrelevant jobs data.
No, it's not.
Oh, is it not?
It's next week.
Oh, is it?
No, it's next week.
Is it really? Why is it next week? Oh, it's because of fucking May Day.
No, it's big. Do you really? I have to out myself as a geek if I give you.
Well, mate, I'm sorry. It's far it's far too late for that. Go on. Why is there no This is how much attention I take to markets these days. Why is there no non-farm payroll?
Well, quite. So the way that the non-farm payrolls number is calculated is that it is typically released 3 weeks after the week containing the 12th of the month. There you go.
Sorry. Go on. Tell me again.
No. Goodbye.
All right, Michael, absolute pleasure as always. Listeners, thank you so much for tuning in as per usual. Hopefully you've added a bit of value and put a smile on your face. Whatever you're doing today, keep it tight, stay safe, wear protection, and we'll see you all tomorrow. Much love.
See you later.
See ya.